Hello and welcome to the Forex Form Guide. Tonight we're going to be taking a look at the Australian dollar and I'm going to be giving you some key forecast dates to watch for now until the end of the year. Then we're going to take a look at last week's breakout on the British pound and where to next for that. I'll update you on the price forecast on the euro that we've been tracking for the last few weeks. And then we'll take a look at some strategy discussion on the US dollar Japanese yen, where I take a look at my concept of smart trading. So plenty of good stuff to talk about tonight. If you're new to the channel, welcome. I'm Aussie Dollarman. This channel is dedicated to the works and teachings of the great WD Gann. And I've put together a short playlist at the top of the channel for videos to get you up and running really quickly with Gann work. If you do find value in this or any of my videos, I'd really appreciate it if you could click on the like button, leave a comment, and subscribe to the channel. Firstly, it helps me to push the video out to more people and spread Gann's message out there. But secondly, if you are interested in trading the FX markets, there's some big moves coming, I believe, in the next month. And you might like to hit that subscribe button anyway, because as we get closer and closer, I'll be giving more and more information about those. Before we get going, a quick disclaimer. This video is for educational and informational purposes only. Bottom line, do your own research. It's not financial advice, and trade responsibly. So let's kick it off with the Australian dollar, US dollar. And we'll do so using Gann's method from page 46 of the Wall Street Stock Selector, where he lined up his charts side by side. I call this wheels within wheels analysis. I talk about it a little bit more in another video on this channel called WD Gann's Gold Part 2, Wheels Within Wheels. And if you want an idea of what this wheels within wheels concept can do for your trading, check out another video on my channel, which I just showed you at the top of the page there. And it's that one there. Aussie dollar US dollar trade makes 16-to-1 reward to risk ratio in just 2.5 days. So going back to the Australian dollar now, a bit of a sideways week, a bit like the euro. We saw a bit of a rally on the pound this week, but the Aussie and the euro were quite flat. That's where we were at the end of last week. We basically have just had a little down bar on Monday, started to rally on Tuesday. I liked the look of that low there. It's this one over here. And the market ran up strongly. I was set up for a nice trade. Then we hit the top of that trend line up here and then collapsed from there. I still think this is going up. I've got this market going up for the rest of the month. But of course, as a trader, I'm paying attention to what the market is telling me. And I'll update you on that in just a moment. But I just wanted to point out here, look at the trend line running down here. This is a technique if anyone is familiar with the work of Frank Tubbs. He was a contemporary of Gann, Tubbs. And he spoke about after the market has a run, so we've got a top here, you've got a run down and then a pullback, run the trend line from there. You've probably seen plenty of channels out there on YouTube that use trend line analysis. You run your trend line through there, see the market running down, it came up and touched the trend line again, started running down there, and then it made its low on the other side of the trend line. And that can be a good place to know that the market has finished this down move and it's now on a new up move. Well, doing the same thing from our August low down here, running that up there to the higher bottom. You can see the market sat on the trend line there, came below it, and then it's made little tops underneath. And that's where that final top last week was. And the market has run down from there. Now, from there, you could run another trend line from here, from that top down to the lower top there. I just have a feeling this is going up. I may be wrong, as I said, but I believe this is going up. Now, ultimately, it's been a very sideways year on the Australian dollar, so I'm not in a hurry to start saying, oh, it must go up, it must go down, and loading up on positions there. I'm looking for opportunities, as I did last week. I ended up taking a trade here. I banked 5-to-1 out of this run up here, and that's even after being stopped out. Had the trade run a little bit higher to my completion point, which was a conservative completion point, I would have had a 17-to-1 there. Just like in that double bottom video that I referenced earlier, it can be done. Don't believe people when they say, oh, look for a 2-to-1 or a 3-to-1. That's a really good result. It's not a good result. The reality is in trading, even the best traders, even Gann wasn't right all the time. And if you're going to be taking losses, you don't want to be risking $500 on a trade so that you can make $800 or $1,000 and then you have 2 losses in a row and all your wins are wiped out. You take one 17-to-1 trade in a month or even in a quarter, and you can have a few losses, 4 or 5 in a row even, which you probably won't have if you're following the rules. It can happen. We all have bad runs from time to time. But even then, you have those losses, and because you've had that 17-to-1 reward to risk ratio in your favor, it wipes out all those losses and still leaves you with a healthy profit, a healthy trading account balance, and a lot of confidence still. That style of trading I'll talk about a little bit later in the video. That's called smart trading. SMART is an acronym. Obviously, it's smart if you can take profits 17-to-1, but SMART is an acronym that I follow when I am taking these trades. So looking at this, we are still above that 50% there. If I was to look over here, you had 3 sections up here and then the market tanking here, down here. it doesn't look great and puts me in a little bit of a dilemma because I think this market is running up until the end of the month. So the cycles are still pointing up. Maybe we have a little bit more downside to go on Monday. We'll see what happens there. But I look at this and I see 1, 2, 3, bang, bang, bang down here. The market had a strong sell-off there and then it can't follow through. And it's just mucked around a little bit. And when it's broken out to the upside. So 3 4-hour bars down here. Now we've got 1, 2, 3, 4, 5, 6 running up here. And the market's not really running down as it's attempting its next pullback there. So as long as we hold above that 50%, I would be looking for an opportunity to go long at some point next week if it arrives and if I can take a low risk trade there. I'll talk more about that a little bit later on in the video. Now, looking on the bigger picture here, you can see on the weekly chart, the sideways nature of the year. This was April, and you can see since April, early May, we've basically been tracking between, if we look at that last range over there, from the September high last year down to our April low this year, we've been tracking between 50 and 62.5% there, just bang, 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 bang. 2, 4, 6, 8, 10, 12, 14, about 15 weeks in a row now, we're stuck in that area there. Now, you can still make money from a trading period like that. It's just a lot harder, and you don't get those. You can get a really good entry, and I had a really good entry last week at that low there, less than 10 points away from the low there. So I'm in with a 10-point stop, but the market's not really running on. You're not getting those big reward to risk ratio trades there. What you want to do is get a trade entry like that, and then obviously at a point like this, and let the trade run off and have a really big move there. Problem is you don't always get that 10-point entry at those really big turning points there. So you just have to take what the market gives you. But looking at that, I can see reasons why we've hit that top there. Obviously, we had hitting the trend line up the top there. That was one. We're on that 62.5% there on the weekly chart. And with this move here, with that weekly run down and pullback, just short of a 75% retracement point there. So if we run down from there, I can understand why it's running down from there. But Gann said time is more important than price. And in my opinion, based on my work and back testing the Aussie dollar, September is the month where I think we're going to see some explosive action. So whether we see that from an extreme top and then running down from there, or whether we run down a bit first, make a lower top, and then run down from there, it doesn't bother me. I'm targeting September for my next trades there. So we'll see what happens this week. I think we might see a higher bottom and the market run up, but we'll see what happens early Monday and then maybe on Tuesday as well. Some key dates to watch. As I said, time is more important than price. The next date that I am watching, and that's for that likely high that I'm looking for, and then a strong run down from there, is the 4th to the 5th of September. And I say that as a likely high. If it were to come in as a low, it wouldn't bother me. You can get the polarity wrong sometimes. The market runs up. This one I'm pretty confident in, but I'm not stupid enough to say, oh, the market's making a strong low here on the 4th, but I'm going to short it anyway because I thought it was going down. That's where form reading comes in, Gann's lessons on form reading. And if you follow that Gann's Gold series, there'll be more on that in the coming weeks and months as well, where we dig into some more of Gann's lessons there. But if you're interested in form reading, you can learn about it in section 2 of Gann's book, How to Make Profits in Commodities. Now, the other date for September, and I think that will be a low, I haven't put that up there, but the date that I've got there would be the 4th to 5th of September down to the 24th of September. These are dates where I'm looking for a strong move out of them in the market. We're not talking about those regular monthly dates where you get 4 to 6 pivot points each month. This is a larger cycle. It's a law of vibration cycle that I'm looking at there. Now, that's enough as a trader to say for that month of September, I'll keep these in mind. You don't just say, oh, I'll do nothing except I'll wait till the 4th of September and then I'll jump in and short it. But for me, they're the dates that I'll be watching in September for potential trading opportunities. Now, I was going to leave it there, but I thought I'll just give you one more. So there's the 21st of October. That's the date for October. So whether we're in a high or a low there, that's definitely a date that I'll be watching for a strong turning point. Now, these dates have been working well this year. They generally work really well on this market. The Aussie dollar is a good market for the law of vibration. Not easy when you've got a sideways year like this year. It makes it a little bit harder. But as I said, the dates have still been working quite well. For November, again, I was going to stop, but there you go. November 3, November 20, December 4, and to round out the year, December 21. They are the dates on my calendar that I have marked for good trading opportunities. Think about those 16 to 1, 17 to 1 reward to risk ratio trades that I've just been talking about. They have been off smaller moves in the market. Some of these dates are going to give us really good turning points in the market, and you only need a smart trade at one of those turning points to get a really good reward to risk ratio and have a good result out of there. Now, this is not trading advice. This is my interpretation of Gann's novel, The Tunnel Through the Air, using the techniques that Gann has put down in that book. And I'm putting this up here. What's today? It's the middle of August. So it's about 3 weeks before for the September date there, and obviously about 4 months in advance if we look at that December date there. Just a bit of proof that you can put them out before the market happens. It's very easy to go back in hindsight and say, oh yeah, this date worked and this date worked, but it's another thing to call them in advance and to have the confidence because you've done the work that these are going to work as well. Now, they may be a couple of days off here and there, but it's a fairly tight cycle, so they're dates that I'll be watching on this market. Now, if one or more of these dates are wrong, I take no responsibility. You can blame WD Gann. No, I'm only joking. Of course, I've done the work as Gann would have wanted it. He wouldn't want you to just follow anything blindly. He would want you to do your own work, come to your own conclusions there. But the dates that I've got there, I've extracted from cycles within Gann's book, The Tunnel Through the Air. Note that I said cycles. It's not one cycle in isolation, but we're talking about cycles from Gann's book, The Tunnel Through the Air. I have done a little bit of work on Tunnel Through the Air on this channel. In particular, early on in the channel, I put up some recommended reading for Gann researchers who are looking to tackle Tunnel Through the Air. I can promise you there's about 20 books on that list. Most of what you want from Gann can be gleaned from those books, particularly the law of vibration work as well, and a little bit of the astro work as well. It's all in there in those books, so get cracking. The problem is people don't want to read 10 or 20 books. I mean, look, Gann's reading list was about 80 books, and I've read about 50 or 60 of them on there. Like, you got to put some work in this field. People don't want to read. I've narrowed it down to 20 books there for you. People don't want to do the work. I get people asking, oh, just tell us this. What's this cycle? Do a video on this one for me. Do a video on that, without wanting to do the work. I guarantee you in this Gann field, no one is going to give you something for free. Gann said you have to pay with your time and with your money and with your effort if you want to extract something from this. Most people who have been in the Gann field to find success, they've been going for several years. It's not something that you're going to just pick up and start running with immediately. There are shortcuts, of course, but you still have to do the work there. There's different levels of work. So you might be looking through Tunnel Through the Air, and I've got a playlist of that on the channel that you can listen to, and I'd recommend that you do that if you want to decode Gann's work, because he's put it all in there in the Tunnel Through the Air. But there's that level where you're going through tunnel trying to sort stuff out. Then there's other levels where you've solved or you've purchased the information. I had to purchase some of the information, I'm not going to lie. It's not all easy to decode, but where you've purchased some of the information, you've got the cycles, but you still have to get them working on your market. So you still have to do the work there on that market. And then there's another kind of work as well where you've got the information, but you've got to be able to put it together. Some of Gann's higher level stuff, I still believe is fairly simple to apply because Gann was doing all of his forecasts without computers. But some of the concepts that you're dealing with there, you're looking at spreadsheets in order to solve this stuff, with hundreds of numbers on them for each example that you're looking at there. So it's pretty complex stuff, and this is why you're not going to find Gann cycles on YouTube. You're going to have to extract them for yourself or find someone to teach them to you. But they are there in Tunnel Through the Air. As I said, some of them are pretty hard to find. Others of them, you will be amazed when you're ready to see them, and most people aren't ready to see them. You've got to work your way along the Gann pathway a certain way. But at that point, they'll just stand out to you and you'll say, wow, how did I miss this? How does everyone miss this? This is crazy, and it's crazy good too. But there you go. I'll leave that for you to find when you're ready. Let's move on to the British pound US dollar now. This is how it looked last week. We had the trend line running down there, and we had the market hitting that trend line and hitting a 50% retracement of this run down here, all in one swing up. And I said, that looks strong. That looks like it's going to go through there. And it did. Here's what happened last week. You can see the market, it was sitting on that 50%. It ran up a little bit, ran down there. If you've done some swing trading work, then you know that's a higher bottom on the swing chart, and the market has run up from there since. It's double topped up there, but we have cleaned out that trend line there, so it looks like that down move is probably over. There is a case that we do have double tops here, and these are trades that they'll look great in hindsight. If that works and that's double tops that runs down, it will look really good. But as a trader now, to have that confidence to make that decision is not easy. We've broken above the trend line. We've shown some strength there, but I think this market, normally when a market breaks through a trend line, it will then come back and sit on that trend line first. So I'd be wary of jumping in and trying to trade this. I'd be watching this week. And if I was going to go long, I'm not going short out of here. I'm not going long from here. A mistake people often make is they say, oh, it's broken out of the trend line. I'm going to buy it. And then they'll buy here. But where do you put your stop loss? At some point it's going to come back and probably touch that trend line, which means if you're buying here, at some point it's probably going to come back and stop you out there. The safer trade there is to wait for it to come back and sit on the trend line. Now, they don't always come back and do that. Sometimes I'll just run straight off, but most of the time they will come back and sit on that trend line. So for me looking at this, I have zero stress at all about this. If this runs up without me, fine. If it runs down without me, fine. But if it starts coming back and then it gets near the trend line, I'll have a look at things like my ranges resistance card and a few other price forecasting techniques that I use, and I'll look to see if I can get a higher bottom sitting on the trend line, sitting on a price pressure point as well. That 50% milestone, that 50% pullback there, that would intersect with that trend line there. That would be Wednesday next week. That might be a good area to watch if there is a pullback into there. But ultimately, you have to think in terms of smart trading. We are coming to that later in the session, but you have to think in terms of smart trading. And for me, that's a small risk on entry so that you give yourself the best possible chance to make a high reward to risk ratio trade. At the moment, going long, I don't see a high reward to risk ratio trade. If you saw that double top and you thought, okay, I'm going to tackle that, you could go short right at that double top as it touches that level there, have a tight stop loss there, and then if the market does run down, there's your small risk entry. I didn't see that. I haven't been following that this week. I've only been looking at that on Saturday, having a look to prepare for this video. But that's what I'll be waiting for on there. And that's advice that has served me well over the years, is trading breakouts like this, especially a trend line breakout like that. Yes, you can make money, but the better trade, you don't always get it, but the better trade is when it pulls back into good, strong support and sits on the trend line, and you can get a much tighter entry, much better reward to risk ratio on the trade there. Now we'll take a quick look at the Euro US dollar. Basically, we've been looking at this price cluster around 119.5. That still looks good to me. A fairly sideways, nothing sort of a week on the euro. Similar to the Aussie dollar, we ran up. We had a couple of smaller ranges up there. It's showing a little bit of a sign of weakness there. It hasn't been able to run down though, and it's closed the week pretty much near its high there as well. Where I would be concerned with this market running down would be if we broke this low over here. That's a strong weekly low there, sitting on a 50% retracement there. And if we did break that low, I'd expect that to keep going. But at the moment, around that 119.40 level still looks like a pretty good level to me. Finally, we have the US dollar Japanese yen. I spoke in last week's episode about this concept of a two-pronged pullback here. We did get that on the US dollar yen. It ran up into a nice little top there where you could have taken an entry to the point there with a small amount of risk there if you've done some work on Gann's price forecasting. However, since then, we had 2 days down and it's pretty much retraced all of that move, and it's stuck in a bit of a sideways rut there as well. Let's say I had to go to work Monday morning and I had to try and take a trade because I have to be in the market Monday morning. I don't really know what I would do, to be honest. It's quite a messy sideways period there. As a trader, I have a set 3-step process that I follow. I have spoken about it before. I'll quickly run through it again for those who are new to the channel. Basically, it begins with a forecast date. I gave some forecast dates earlier on for the Australian dollar, US dollar. It starts with a forecast date. I come into a forecast area and I look for a trading setup there. Now that trading setup might have something to do with the wheels within wheels approach. It can be a swing trading setup. It might have something to do with price forecasting, trading the culmination of a move if I can get a really tight price forecast together there. But I look for some kind of a trading setup where I can get in with a low risk entry. An example of that is that video that I spoke about earlier, the double bottom trade on the Australian dollar, US dollar. You'll find that on the channel. But once I have that trading setup, that doesn't mean I take it. So pause and think about that for a moment. You've got a forecast date and you've got a trading setup, but I'm still not necessarily going to take the trade. You're probably thinking, what's wrong with this guy? Is he too scared to pull the trigger? No, I have to have a smart trade before I'll take it. And this is something that I've built over the years, having taken a lot of dumb trades. I can find plenty of dumb trades in the market and show you examples of them over the years. But from that, you learn from those experiences, and that's what I put together, is taking a smart trade. Now, SMART is an acronym, S-M-A-R-T. And I'll run you through what that means very quickly. S is for small risk on entry. Now, at the moment, in a sideways period like this, it's very hard to get a small risk on entry because the market, it's broken out to the upside a little bit, broken up to the downside a little bit. We're sort of stuck here, but you very rarely in the middle of a sideways range get a small risk on entry. I'll tell you, for those who want to go and do a little bit more work on this, that top there, you could get a very small risk entry on the trade. In fact, we have actually discussed that in previous episodes of the Forex Form Guide. And another one is this one here. Okay, there was a small risk entry there last week on Tuesday. So that's step one of a smart trade, a small risk entry. Why do I want a small risk entry? Look at the market. 151 was the top there. So running down here, we'll just say it's a 146. That's 500 points to get from there to there. If I take a trade with 100 points of risk, and then, let's say I get in down here, 100 points of risk, now I've got 400 points there. And this is just arbitrary. I'm not saying that's a major low or anything, but 100 points, and it runs 400 points in my favor, I make a 4-to-1 reward to risk ratio. Now that's okay. It's not terrible. I banked a 5-to-1 last week, and money is money. But if you can get a small risk, let's say you could get a 20-point risk on entry here. So you get in, put a stop loss 20 points away, and then the market runs 500 points in your favor. Well, that's how you get a 25-to-1 reward to risk ratio. It's that simple. There's two ways that you can do it. One is using swing charts. You find a big swing chart where it looks like there's going to be a turn on the big swing chart. Then you use a really small swing chart to try and finesse an entry into it. And that's a skill that you have to develop over time. It's not an easy one, but you'll get there if you practice with your swing charts enough. And if you set your charts up like Gann did in that Wall Street stock selector example I showed you earlier. But swing charts is one way to do it, and price forecasting is another way to do it, where you can identify those. Gann called them mathematical points of force. And if you can find one of those and you can get a really tight grouping of price milestones there, you can take a trade right on that level. And you'll see Gann in his courses like Chrysler Motors lesson, US Steel lesson. At times, he's just jumping in right at the extreme top or bottom because he's done his price work. He knows how far the market is likely to go, and he'll take a small risk entry there. He'll be wrong sometimes, but when he's right, you get a big reward to risk ratio there, and that's why the compounding is so big. So a small risk on entry is a key there. Next is to move stop loss to break even quickly. This is for me. I find if I can get a stop loss to break even as quickly as possible, it lowers my emotions on the trade. It takes all the emotion out. If I get stopped out, hey, it's a break even trade. Didn't lose any money. Who cares? Okay, but if I take a trade, and back in the day I used to overtrade a little bit. If I take a trade and I've overtraded and the market's moving up and down quickly, your emotions are going higher as the market moves in your favor, and you go, oh, I got this great big profit there. Then it quickly goes against you a little bit, and you're now in a bigger loss, and your emotions are going up and down, up and down, up and down. And when your emotions get too high, it's a little bit like revving a car. You just put your foot down. The car's in neutral or it's parked, and you just rev the engine, and the tacho's just going higher and higher and higher until the engine blows. Well, that's what happens to me anyway as a trader. If my emotions get higher and higher, my trading blows. So I try and keep my emotions as flat as possible when I'm trading. And the best method I ever found to do that is get the stop loss to break even as quickly as possible. Now, how do I do that? Well, here's an example. These are the two trades that I just showed you where it is possible. I'll let you do your own work on that using Gann's techniques to see if you can find out how you might have entered very close to those extreme turning points. But if you get in there, have a look. This is an hourly chart now. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 12 hours later, bang, the market's down here. Within 12 hours or less, you could, let's say you entered up here, you just move your stop loss to break even, and worst case scenario, you get stopped out for a break even. So all of a sudden, you're in a trade with no pressure or stress because worst case, you're not going to lose any money unless you hold it over the weekend and there's a gap. Or if you're trading a stock and you hold it overnight and there's a gap. But in the FX markets, 24 hours, Monday to Friday, you almost never get a gap in the middle of the week. You get little gaps like this at the start of a new week. That can happen occasionally, but as long as you don't hold that over the weekend, you're fine. So I like to get in with a small risk on entry, move the stop to break even. Sometimes you can do it within a few hours. So for example, let's say you went short right on the top here. 2 hours later, the market's down here. 3 hours, you're down here. Within 3 hours at that point there, you'd be comfortable to move your stop to break even. So that's what you want to do as a trader. Get in with a small risk on entry, move your stop loss to break even quickly. Then you can start to accumulate positions with the market's money. And every time I do that, I make sure my stop loss for the entire position is still at break even or better. So that's another dumb thing I used to do in trading. I would get in and I would just keep buying if I was in a bull market. Every time the market moved my favor, I've got a bit more margin. So I buy some more, buy some more, buy some more. And I would end up taking some trades, being in a lot of profit, but overstepping it. And then when the market comes against me, I'd still end up with a loss there. So I worked out, once I get into the accumulating phase where I've got an initial position plus a second or third or fourth position, once I take that second position, my rule is I've got to have my stops at break even. Again, taking more positions, you're increasing the emotion on the trade, and that's when the errors can start to creep in. So small risk, move stop to break even, accumulate positions, and that's a smart trade just by itself. The R stands for read the market, form reading the market, to give you an idea of when the move is going to end. That's one of the best things in Gann's book, How to Make Profits in Commodities. It's that second section, form reading the market, particularly things like sections of the market and some of the signals the market can give you, the top and bottom patterns that Gann talks about there. Read that chapter and you'll start to see signs that the market move is over. Don't wait for the market to go all the way back and stop you out. If you do your form reading and you see signs that the move is over, take the profit, which is the T there, and move on to the next trade there. So that's what I call smart trades. Feel free to leave a question in the comments below and I'm happy to answer that for you. But that's how I attack trades. Remember though, I always look for smart trades, but it's at a forecast date with a trading setup there. Okay? It's all three combined together. Smart trades alone, they will help you, but for best use, you want your forecast dates and you want your trading setups as well. I actually took a smart trade last week on Tuesday, as I said, on the Australian dollar, US dollar. I thought with this being a big 50% retracement here, I thought we would go higher than we did. We had 3 sections up and failed. I was away from the market here. Notice, see this market made a run up here, and then that's clearly a smaller range compared to this one here. That happened overnight. That ran up into another 50% retracement with a double bottom there. So a good place to move stop losses up to using form reading. Then we started running up there. I'm away from the market. Come back, bang, it's stopped out. I was a bit surprised, but just take your profit and move on in that case. But that's an example of a smart trade there. Small risk on entry. After I got in, look, one bar up. If you're in near the bottom there, and the market runs all the way up there, 1, 2, 3 hours up there, if the market comes all the way back down here, you're probably going to get stopped out. So you want your stop at break even, and I had that, and very little stress on the trade as it unfolded. That's all for this video. I hope that you found some value out of it. If you did, again, all I'd ask in return is if you could click the like button and leave a comment. Again, you might have a question. Feel free to ask that question as well. I do read all the comments. And if you want to stay up to date with my videos, subscribe to the channel and turn on notifications. Of course, if you have already subscribed, you don't need to subscribe again. You've already subscribed. That's it. You'll keep getting those notifications. That's all for the Forex Form Guide this week. I'll be back next Sunday at 7 p.m. Sydney time for another episode. Until then, I wish you a fantastic week. Good luck with your trading and with your research for those who are tackling tunnel through the air and decoding Gann's work. All the best on your Gann journey and in life, and I'll see you next Sunday. Till then, all the best. Bye for now. Hey, it's been a while since we did a post-credit scene, but if you hung around, good for you. Here's a quick one for you. I mentioned that the Aussie dollar dates that I gave you were key dates. Notice that key was in inverted commas. Don't post this on the channel because that'll tip off to people, but have a think. If you've listened this far, go into Tunnel Through the Air or think back to Tunnel Through the Air. Where does Gann mention keys? And I'm not talking about car keys or aeroplane keys in the case of Gann. Food for thought. See you next week.